Good evening. I'm your host, Peter Resnicek from ShadowTrader.net, and this is another edition of the ShadowTrader Video Weekly for Sunday, January 23rd, 2022. Good to be back with you guys. I hope you enjoyed my presentation from last week, which was a recording of a free webinar that I did recently called How I Trade Weekly Options. It's up on YouTube. I actually have it linked in the comments to this particular video, so if you haven't checked it out yet, you can check it out there. This video is being recorded actually midday on Friday, the 21st, but you'll see in a second, given the information that I'm about to talk about, that won't matter, and there's one specific part of this video that actually benefits from the fact that I'm talking about it intraday, and I want to show you that as well. So the title of this week's video is It's Going Down, which is pretty self-explanatory, but I think if you're going to say it's going down, it's very good to get some context around that and see just how far the market has come off already and where it could potentially go. This is a weekly chart of the S&P 500, and what I've done here is I've just kind of marked off where there would be a 5% correction and a 10% correction. And that's a 5% correction from this all-time high and a 10% correction from this all-time high. And in this particular week, we've had some major selling, not only breaking that longer-term trend line, which I've talked about in past videos, the one from like March to April 2021, but now we have gone well below the 5% correction mark, and look where we're headed, potentially for a 10% correction. And it's definitely possible, I think, that we do go there, given the momentum that we have to the downside this week, and the fact that we do have a support level here from October 4th, 2021, right around 42.79 in the S&P. You can see current prices were around 44, 48-ish right now as I'm speaking to you midday on Friday. So there's potential that we actually go there. Note that there's also a 50-period moving average on the weekly that would catch price right there. So if you look at this chart, given the momentum of what happened this week, coming down underneath that trend line, breaching the 5% correction, I think there is potential easily that we could go a little bit further, and maybe the S&P sees that 10% correction. And as you know, that's when people start calling it an official bear market, when you're in like a 10% correction territory. So we shall see. Now let's shift over to the NASDAQ 100, and here's where things get really interesting. I mean, the NASDAQ is generally a little bit more volatile than the S&P, and we've been seeing a lot of dynamics over the last, say, 6 months or so, where the NASDAQ has been either leading big or lagging big and kind of really acting as either the pulling force on the market or a big drag on the market. In this case, I think it's a question of the latter, because we just got finished talking about an S&P that had breached a 5% correction and was headed for a 10% correction. But in contrast, look at the NDX here, NASDAQ 100. It's already well through a 10% correction, which is amazing, and it's headed for a 15% correction. So this 15% correction in the NDX actually ties right in with the early October lows that we just talked about in the S&P. But again, in contrast, that's going to be a 10% correction in the S&P, but it's going to be a 15% correction in the NASDAQ. And again, same exact dynamics as I talked about in the S&P chart. You've got that trend line break. You've got big momentum to the downside, big body candle. I think it's probably self-fulfilling prophecy that the market wants to slide a bit lower, and we see that 15% correction. A lot of this is going to have to do with the rest of the Fangman plus T reporting over the next 2 weeks, which is important. We got Netflix already. They got absolutely destroyed. We have to see if that's a portent of things to come or not. Probably a lot of the trajectory in the NDX going forward over the next couple of weeks to see if we get that 15 is going to have a lot to do with how the earnings come out of those remaining Fangman plus T stocks. I want to talk a little bit about the Russell before we wrap up the TA on the majors. We've talked for a long time about this extremely long consolidation in the small cap stocks that's been like 8 to 9 months, and notice the breach. Huge big body candle on this particular weekly chart this week, taking us out of there. And we've talked about this before, that there's potential, obviously, given all of the overhead supply now in the small caps, that this could slide lower. And that also is going to be a catalyst for pushing the other indices lower. If you recall, we also talked about the fact that straight up areas like this in the chart where there's just one-sided trade, remember, that doesn't offer very much support. So if you are long small caps, be aware that you have this break out of a huge consolidation, and there is actually potential that it could slide all the way down into this area closer to like 1700 in the Russell, simply because of basic technical analysis that what goes straight up doesn't offer much support on the way back down. If you recall earlier in the video, I was saying that I'm recording this week kind of different, not when the markets close, but midday on Friday. And during the day is when we get all of the fantastic signals from our new weighted AD indicator. It's the weighted AD line of the S&P. This thing has been no less than incredible ever since we started using it about a month ago. And I wanted to share with you just a couple of signals that came in today during the day. Again, this is Friday, January 21st. So if you were trading intraday and you were having a little bit of trouble about knowing when to be short, when to be long, pay attention right here because I think this could be of big help to you. So the top chart right here is a 15-minute SPY, and I've got my weighted AD line on a 5-minute. I like to use a 5-minute on the weighted AD because I feel like it gives me better signals, a little bit more granular, and I can see things a little bit more clearly. But notice the yellow lines that I've put here marking off these two time periods. They're the same times, except it just looks a little bit wider on the bottom because this is 5 minutes, hence more bars, and this is 15 minutes, hence less bars, okay? Look at how the S&P here on Friday has an opening drive lower. So the first move on the S&P is an opening drive lower, and notice what's going on in your weighted versus unweighted AD line, all right? The weighted sectors, which are the histogram, the yellow and purple, are driving down below the unweighted, showing you that selling is happening, hitting all cylinders. You've got tech selling, you've got healthcare selling in concert with smaller sectors such as, say, materials, energy, real estate, etc. It's all hitting on all cylinders. Interestingly enough, though, prices never move in a straight line, and sometimes a market needs to rally before it can break. My mentor in the market profile, Mr. Jim Dalton, always says that, and I always remember that. It's a fantastic thing to remember. Sometimes markets need to rally before they can break. And so obviously you get a little bit of a counter-trend rally here in the morning on Friday. And notice what happens, which kind of keeps you on the right side of the market, is that you start to get an increase here in the AD line, and notice right here, I've marked it off, which is the first yellow line, it goes positive. And notice right here, which is the same exact thing on the yellow line, when this goes positive, I think a lot of people were probably initiating shorts right here, and guess what? The market actually goes up for another 30 minutes from there. And the confirmation is here that the sectors are now positive. Now you've got a weighted and an unweighted, all positive, and then when is it time to short again? Right here on the yellow line with the confirmation that the indicator is going negative. And notice what happens from there, straight trend down, and we've been moving down ever since from that time with the confirmation that the weighted sectors are just as weak as the unweighted. You can see the histogram poking down through the white line, and it's off to the races for the sellers again, and they're completely in control, all right? We sell this on our website under the stocks tab. It's in our ThinkScript section, $95, extremely reasonable. We've gotten fantastic feedback from this. I can't tell you enough how many fantastic signals this gives every single week, day in and day out. There's just fantastic signals, either looking for confirmation or divergence. Lots of different ways to look at this thing. This is a day which is more of a trending day in one direction, so you've got the weighted and unweighted working together, but a lot of times you'll get a signal where they're not working together, where you see huge divergence between the white line and the histogram, telling you that either the weighted sectors that have more weight in the S&P are either much stronger than the unweighted, or vice versa. And think about it. The S&P can only move in the direction that its 500 stocks move, and those 500 stocks are made up into groups of sectors, and they all have different weights. It's very, very different when a small handful of energy stocks and real estate stocks and material stocks all go up. They don't have much effect on the S&P because it's cap weighted and there's just not enough there. But when technology stocks and healthcare stocks and communication stocks and financials, they start to move, that pulls the S&P a lot more. And this particular indicator shows you when the strong sectors are leading and the weak sectors are not, or vice versa. And it gives you an incredible amount of market-generated information in real time during the day that I think will help you make much better trading decisions in your intraday trading, or even if you're trading for longer term and you're trying to hone your entries, this can really help you in a big way. So check it out on our website if you like. Again, it's a ThinkScript called Weighted AD, and it's under the Stocks tab at ShadowTrader.net. And that's all for this week. Thank you so much for joining me yet again. Quick reminder, if you like this content, hit the like button and subscribe to this channel. Also, check out the comments down below. I've put 2 links in there for you. One link is for the How I Trade Weekly Options webinar. If you haven't seen it yet, that's in there. And then I've also put a link to the weighted ADS-PD script. If you'd like to get that, put it into your own quad and see if it helps you make some better decisions. All right. Next week, the focus is going to be all about whether or not we see corrective activity to the downside. Again, pushing closer to that 10% correction in the S&P, 15% in the NASDAQ, and most importantly, we're going to get 3 more Fangman plus T, I believe, reporting next week, and then the rest the week after that. So a lot of the focus in the NASDAQ in terms of what's going on is going to be on those big name stocks reporting. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.